Hello, 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 everybody. This is Steve again with the Padernacht Real Estate Team at Keller Williams, and this is Mortgage Matters, episode 5. So, for those of you that actually saw the thumbnail, this week we're talking about creative financing, and I think that this is a very important topic to discuss because not everybody seems to check all of the boxes when it comes to what we discussed last episode, which was credit, W-2s, 1099s, and it's important for there to be options for people. So I'm going to bring Christian on again so we could talk about this. Hey, Christian, how you doing, man?
How we doing? I'm good. How are you?
Good. Thanks for joining us once again.
Absolutely.
So I was talking before you, you and I were talking before about what to discuss this week.
Mm-hmm.
And I think we should start with just some basic news. I mean, what I'm seeing, and you could tell me, from your end, is rates. I mean, the rates are coming down.
Yeah. Yes, finally.
It's really encouraging to see the rates coming down, and I'm in my mind I'm thinking like they just want to give everybody a Christmas gift.
Yeah. The funny thing is that that gift is a rate in the sixes, whereas if I said that in 2021 you'd slap me.
I know.
Now that's the amazing thing about perspective. When rates went as high as 8%, in October, now here in sixes again, it's like, it's an amazing, it's like a miracle, so yeah.
Well, I'm looking at it. Well, I look at things, which I'm sure you do too, dollars and cents, right? Mm-hmm. So like a home that you're buying for $500,000, if you're putting down 20%, you got a $400,000 mortgage at 8%. You're talking, now that at 8%, it's a ridiculous amount of money per month. But now that it's at 6%, those $500,000 and $600,000 homes look a whole lot more attractive.
Yeah. I mean, even we're just doing an example of somebody, that when we started the conversation, rates were 7.75 with her scenario. Now we're talking about a rate of 6.6, 6.5.
Yeah,
it's only on a $360,000 loan, which is not a big difference. It was almost $300 less per month. I mean, so it has a significant impact on buying power. And a significant, even just psychologically, it's got a significant impact on, the people that might be on the fence now thinking about buying. Definitely helps them, have, more digestible payment and might want to take the leap.
Yeah. We're in it every day, right?
Mm-hmm.
So we're talking to people every day. So the example you just gave, I had that actually happen to me as well when I'm talking to a buyer and they're like, rates, because before I even send them your way, I kind of do a quick calculation myself. Mm-hmm. I use the mortgage calculator on the wonderful app that you have provided me with.
Thank you. Awesome.
And, we're looking at it and I'm like, listen, a month ago, they were like, listen, it's just too tight. Now we had the conversation yesterday and it's like, all right, you got a little bit of breathing room there. And it actually allows some buyers to even move up in brackets.
Yep. Yeah.
Right.
Sure.
So that $400,000 house where you just couldn't find anything. Now you can bump up to 450, maybe 475, depending on certain things. So it just changes the entire dynamic. And it just, for me, it really just shows how important it is to watch these reports that come out every week, because prior to me talking to you, I had no idea that like the inflation report was so important, or like the jobs report, or like, these big companies that are reporting, Walmart's reporting. And so the Fed really is taking cues from these huge organizations that we, as the general public, well, you and I, not necessarily, but the general public doesn't even know about.
Right. And mortgage rates react very fast, to news, so the Federal Reserve, they're being a lot, they're reacting. I don't want to say slower, but they're watching kind of a long-term trend before they decide to cut the rates that they've been increasing over the last couple of years, but mortgage rates react very fast, which you can see, I mean, just like I said, just a month and a half ago, we were talking 8s and like the sky was falling. Now, a 1.5% drop in that short amount of time. In my 21 plus year career, nobody's seen like this kind of volatility. Where we're talking about 0.5%, 0.75% swings in a week's time. In just a few years ago, 7, 8 years ago, that would have been catastrophic, and it would only happen maybe once a year. Now it's
Yeah.
been like once every few weeks. It's up. It's incredible volatility. It's like been a roller coaster.
The the sharp contrast, right? So like for me, there's properties that I'm looking at that at the 8%, you can't even keep the properties because the debt can't cover the amount of money that's coming in. But
Right.
now just that 1.5 drop changes the
Mhm.
entire dynamic. And I'm telling you, like me personally, like a month and a half ago, I'm like, oh man, what am I going to do? I'm going to have to sell this property because you can't seize the equity if you can't afford to cover the payments every month. And
Right.
now a 1.5 down a month later, and now look at that, the skies are getting a
Mhm.
little bit bluer.
Right, right. Oh, you're right, you're right. And it is amazing how quickly even people do react to positive news and negative news. And we're already starting. You see, very quick uptick in inquiries for pre-approvals and new applications coming in. This time of year, it's always been a seasonal business. So I mean, this time of year, we're seeing a lot more closings than new applications in a regular market anyway.
Mm-hmm.
But it's at least gives us some light at the end and the horizon for the first quarter of this year for sure.
Yeah, Q1
Next year,
looking very
Q1,
positive right now. Very
right,
positive.
right,
And the
right.
normal, like you said, the normal slow season of the holidays,
Mhm.
I'm not seeing it this year. I'm seeing a
Right,
lot of people answering calls, and I haven't really heard so much like get with me after the holidays.
right, right. No, right. So exactly. There's still definitely more of an uptick in activity. I was just with a real estate friend of mine yesterday. They have 25 listings coming on her one team, 25
Wow,
new listings coming on.
good
That
for
are
them.
queued to come up in the first quarter of next year. So we're definitely, I'm hoping that's a sign that we're going to see some more inventory drop, in our local markets, and that'll really, open things up.
Yeah, yeah,
And
yeah, for
interest rates
sure.
are going to help that for sure.
So, you and I, obviously have gone back and forth and had many, 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 many conversations. But one of the biggest conversations that you and I have had was figuring out a way, because I am technically a 1099 employee. At
Hmm.
being a realtor, you're a 1099. So I don't have the W-2s that we're always talking about, and I don't have the sort of pay stubs that come in. So you and I both kind of decided to talk about, what type of creative ways are there
Hmm.
currently,
Hmm.
especially now after the rates are coming down a little bit for people like myself that are
Hmm.
1099 and don't necessarily have the pay stub. So can you
Hmm.
give me some examples of some sort of creative financing ideas or things that we could kind of, that would be opened up to the general public?
Absolutely, yeah. I mean, there's in the last few years, there's been it's called these non-QM loans that have been coming onto market. It's I'd probably say at least the last 4 or 5 years when we started seeing the first ones comes on.
So
Now it's
non-QM, what is QM? What does that mean?
right. So QM is qualified mortgage.
Okay.
When they passed Dodd-Frank, they actually defined what a qualified mortgage was for a person buying a primary residence, and it's basically what you and I have been talking about. Your traditional, fully documented mortgage, which is pay stubs, W-2s, tax returns. As a result, a lot of self-employed borrowers specifically who were in the market prior to the crash, we were pushed out of the market because as a self-employed person, you have people that have, multiple different corporations, you have S corps, you have C corps. People pay themselves differently, but more importantly, they can write off expenses, which is what every self-employed person or accountant is going to do. When you run a business, you have, a top line income coming in, and then you have all your expenses coming out,
Of course.
wages, materials, depending on, contractors, especially, have a lot of material costs, you have insurance costs, you have all these different costs that you write off. So your top line income, could be $1 million, but your bottom line income would be, significantly different depending on how you file and
So
whether or
in
not
other
it's a
words, gross
corporation.
income. In other words, gross build
Yeah,
income. Let's say a contractor billed out $1 million worth of contracts, but at the end of the day, he really only netted 100 grand because he spent $900,000 on materials, labor, so on and so
right,
forth.
right. So what's written into law is that lenders have an obligation to prove somebody can make their monthly payment every month because as a result of the Great Recession and the housing meltdown, when those guardrails were not in place. So we have to prove that you can make the payment. And the traditional way of doing that is through your, pay stubs and W-2s, but not everybody is a salaried W-2 employee or an hourly worker. There's tons of entrepreneurs, especially in our area in New York. I mean, there's, it's all entrepreneurs. So, what these non-QM loans allow us to do is still prove that you can make the payment, but not through your traditional, W-2 pay stubs, tax returns. The biggest one right now is the bank statement programs. So, what we do with a bank statement program is a business owner like yourself, you have separate bank accounts for your business. You have money, flowing in and flowing out of those business accounts. So instead of us looking at your tax returns, we look at the deposits going into those accounts and accumulate those deposits and create the income over either 12 or 24 month history. So I just, literally this week, pulled a deal that was denied at a major bank. This exact scenario: contractor makes good money, reports everything, reports expenses. His income on paper was about $79,000, which really wasn't getting him to the loan that he needed. His debt ratio is the traditional way, were over 50%. So we couldn't get him a loan. So we went with the bank statement program. We got 12 months of his business bank statements. We sent, we could, counted up all the deposits. His income actually turned from $79,000 to $256,000 in a year.
Wow.
So now, not only could he afford the house that he's buying now, you probably, get him a mortgage for 2-3 times the amount that he's actually buying. So,
So I just thought of this. So you could grab all of the bank accounts that I have all of my businesses in. It doesn't necessarily have to be my primary, which is the real estate business. So like if I'm a 100% owner of any other business that I have a bank account for with deposits flowing into it, that would qualify as well?
Yeah, well, you'd want to go with your main business, obviously, where you're getting the most income, so because if there's money flowing out of those other businesses that you have, it might not accumulate to a lot. But yeah, theoretically, that's exactly what we would do. And it works. It's really got to be, I've had somewhere, it's failed, and I've had some other, huge wins, but at least gives people an alternative option, a more creative option, which is the title of here. It's for us to look at as opposed to just a traditional option. So it's really good. You have to be self-employed for a minimum of 2 years, so, we're looking at people that have, an established business, and then really take it from there.
Interesting.
Now for investors, one of the other ones that we come into play is debt service loans, which work very similarly to like the commercial loans that you were just mentioning earlier. Where you're basing the loan on debt service. On residential property, these are, again, strictly for investors. This is not for your primary resident, first time home buyer. This is for an investor who may not be showing the income on paper to support a new investment property. What we do look at, though, is the income from the property itself to cover itself. So if you own a
3-family or a 4-family, you could use that income.
Right. So we just, essentially really just looking at the property. We're looking at the cost of, the principal, interest, taxes, and insurance, and then using the rental income from that property to pay for itself, which is why it only works for non-owner occupied, because, we're using the income to pay for itself.
Interesting.
So for investors, I have one investor right now. He's got, I think, 15 properties. He actually would qualify for a full doc loan. He just doesn't want to be bothered. So he, and the rates are higher. So there is a catch. I mean, the riskier a loan is, the higher the rates will be. So the rates on these loans are definitely higher. And he's totally willing to take the higher rate just because we can close them a lot faster and not have to be digging through all of his multiple corporations and, and different properties. We'd have a stack of paperwork, and again, we're very good at it. My team is exceptionally good at doing, regular loans and all these loans, but he just didn't want to be bothered.
Yeah, well, it's a pain in the butt to go around and now collect. Believe me, I know the feeling. Every year, tax time, it's like, all right, you got to go collect from all these different accounts and do it's. Your average person takes their W-2, goes to their accountant, and they're able to do their taxes. But like for investors, and it's a lot more difficult. So I understand completely that this guy does not want to be bothered with doing all that stuff, because it's just more paperwork, and you'll pay the couple extra, points or whatever it may be, as long as the property can still sustain itself and you end up with your ultimate goal of buying the property and having a cash flow positive.
Right. Exactly. And it totally makes sense for him to do it. And, so, we're doing not just one, but, multiple properties for him, so it's, a lot of times investors, like, this particular client, he has multiple properties that don't have mortgages on them. So he's actually, we're doing some cash out refinancing where he's using those same DSCR loans to take cash out of the properties that he owns free and clear, and then leveraging that money to buy more property.
There you go. That's the way to do it.
Yeah.
And how did you come to this sort of decision with him, right? Like I imagine, like for you and I know it's a lot of like, all right, Christian, here's what it is. I'm gonna just tell you my entire financial situation, and then you kind of digest it and say, all right, I think I could use this, and come up with that creative sort of way. Is that kind of how your workflow is with people?
Yeah, I mean, it's the same way on any loan. It's like putting a puzzle together. I mean, it's in being a problem solver. And being, which is what I love about where I work, is that we have all these options. We have, all the power of a direct lender and a broker all under the same roof. So there's really not a loan product that we don't have. If it's out there, we don't have it. It just doesn't exist. But it gives me that ability to have more tools in the toolbox to help more people and not have to say no. So like this
How
guy.
does Go ahead. I'm sorry. You were telling me.
In particular, was used to working with a credit union, for his previous loans, and I could see on his credit report he had like 5 loans with the same credit union, and then he was like a relief for him when I was, telling him about these alternative products because the credit unions just don't have them. So it's been great.
How does Loan Depot roll out new products? Do they like send like a memo? I mean, listen, you're a branch manager, so I imagine you get it on your desk prior to it going out to the loan officers. But like, how do they roll out these new products?
I mean, rollout, sometimes can take, months, and we have consistent, branch manager and all company meetings, and in each one of those meetings, we have our operations people. They tell us what's being released and when, and what's kind of in flight, which means like still in, they're kind of, testing period and development, so, we really just have to kind of a gauge. If we start talking about a product, this month, we might be looking at releasing it 4, 5, 6 months because everything's got to be programmed and built into our system. So we have a lot of lead time in terms of what we're working on and developing, way ahead, and when it's officially rolled out.
What is your favorite part of your business?
That's a good question. I mean, it's always been my relationships, to be honest, and helping people. I mean, that's why, I've always worked with real estate agents. I've always, I've developed relationships over years and years as just being a reliable resource for them and their clients and helping them build their business through, their customer experience. I mean, you guys, like yourself, I mean, you build your business on referrals, you're built, your past client database, and, and those people, if they have a great experience, they're going to want to refer you their friends and family and everybody else. And I'm part of that. I'm a part of your team to help them to get through the process. But again, also have the solutions, doing right by them, not overcharging them and, those kinds of fees and everything else. And but that's my favorite is really first time home buyers. And it's because, again, these are people that, are just getting started out. I've helped so many families that, were generational renters that never even thought they would buy. It wasn't even in their wheel, like in their view. They, for the entire generations have always rented. Their grandparents rent there, and for those people, especially when you really start opening up, financing and buying a place and having it your own, when they're traditionally been dealing with landlords and having to, deal with all those headaches, and that's a great experience. So
yeah, I feel the same exact way. First time home buyers are honestly one of my favorite clients, and it's because it's like you get that feeling of really helping somebody now, because you don't even know, like you help somebody buy a house today, it's going to help their kids, it's going to help their kids. Like you don't even know, that house could be in the family for generations, and then maybe like their grandkids or 3, 4 generations down the line are going to use that equity to now fund their college or whatever it may be. So yeah, I agree with you 100%. First time home buyers are definitely one of my favorite clients as well.
Yeah. But purchase business just in general, I mean, I've always been, very purchase heavy, when rates drop, we're doing a lot of refinancing and everything. I've never really chased that business. That business has come to me through my past clients and referrals the same way my regular business comes, but I've never really, chased refinance business or, kind of churn my loan pipeline, year over year. In New
Yeah.
York, closing costs are a lot heavier, heftier than other states. So people
Oh, yeah.
refinance less in New York. Because it's not really in New York, especially if you can't really sustain a long-term business on refinancing, which we're finding out now. With rates as high as they are, there's really very few. We've got a couple, people that are consolidating debt, but very few refinances going on right now. So as a loan officer, if you've built your business around refinancing, you're really not in business right now.
Yeah, it's very tough, very tough. And it's interesting. Like for me, I always like to learn how people make money, especially entrepreneurs and people like us that are out here really hustling every day. So it's interesting that you say that like the refinance business is not so lucrative at this point for you, and you're focused on the purchase because now you take a deep dive into your business, right? All right. So how does Christian Babcock, how does he lead generate? How does he, where does he put his time? And it's not necessarily into the refinance, but there are people out there that make a ton of money and that's their business model.
Well, and they're businessmen there, and for that reason, though, they're victim to the cycles, of rate cycles. Whereas when if you constantly focusing on purchase business, like even during the last refinance boom, if I had 10 messages, and the first ones I would call back were my realtor partners, my purchase clients, my pre-approvals, and then the refinance people that they would come last. I would always get back to them, and I would take the loans, obviously, but I always have prioritized my purchase business because it's the only way you can stay consistent in this business. So, and there's always people buying and selling. We're blessed with, a large population where we are doing business. So there's always people looking to buy and sell. So it's just a matter of having the right relationships.
How important is it to have a solid team? Because Christian Babcock doesn't do everything on his own.
No,
as much as
you think I did.
How important is it to have a good team, and who's on your team? Like, not necessarily names of people, but more so like who do you depend on as a branch manager and as a loan officer?
Yeah, I mean, my primary, on my personal business, my primary focus is I'm always the front person in terms of every lead that comes in, it speaks to me. So and I help structure the loans. I do the pre-approvals. I get back to the agents, the attorneys, and but once that loan is, once that deal is consummated and there's a contract, I have, all the instructions in terms of how we're going to write that loan, and it goes to my business partner, Bill, and he basically, I call him my OCD partner because he literally has the time because, he's looking through every document, every line, and he's putting a needs list together. He's structuring the loan the way that I'm telling him how to structure it. I know the loan's going to work, but he's the one that's going to do, all the disclosures. He's going to, get them all their instructions, hold their hand from the beginning, until it gets into processing and underwriting, and is able to give the same level of service that I'm giving up front on the back,
Gotcha.
So, and then, essentially once it gets from him into I have a dedicated processor, I have a dedicated underwriter, they're the ones that are, getting it in and out of underwriting. And then they take the ball, once the loan is approved and take it the rest of the way and clear it, so it's a really very systematic assembly line process that I've built over time with the right people that are as dedicated to my business as I am, and care as much about, about my business as I do, to get our clients through the process, and very happy in the end, and then closing. Every loan closes.
That's the most important thing, right?
That's right. That's right.
That's the most important thing. You quote somebody a number or you give them a that pre-approval that we talked about a week or two ago, and just making sure you get to that finish line, because the biggest thing that I see as a realtor when people are when I'm on the sell side and I'm representing the listing is people will give me a pre-approval and I'll look at it and I don't know that if I don't know, then I always ask first question, who's the pre-approval from? And then now what I've added to my business over the course of the past 3 or 4 years is I always pick up the phone and I call the lender, because I made that mistake too. And you only learn through trial and error, right? But now I call that lender and I'm like, listen, okay, so tell me what their finances look like. Tell me if they, especially with co-ops, you know, like tell me about their DTI. What did you quote them as a DTI? Tell me what they're showing as debt on their last credit report. When did you run their credit report? Right? Like how long ago? Oh, we haven't run it in 3 months. All right. Well, then that might be a problem for me. I then go back to the buyer and I'm like, listen, the buyer's agent or the buyer, and say, listen, go to Credit Karma, show me something that shows that you don't have ridiculous amounts of debt on here. And it's just so important to now make sure that you're dealing with a lender such as yourself that can get the deal closed. And you know, you're the face of it, right? So it's like, all right, Christian's the man. Christian got this done for me, but Christian doesn't do it on his own. And he's got this team behind him that really kind of makes this all work.
Right. That's, I mean, there's so much that goes into the home buying process, especially when it comes to a mortgage, that if things aren't done on time, especially co-ops and condos, you know, we're dealing with management companies, we're dealing with appraisers, getting in touch with the management companies. Like there's so much more coordination going on to get the loan through the process at the right time, you know. And, you know, again, we've all learned from our mistakes, you know, and I always advertise, you know, that I made my mistakes a long time ago, you know, so, you know, everybody's made them, you know, but, you know, if you're smart, you'll learn from them and never make the same mistake twice.
Yeah.
So, and that's, you know, being in the business over 21 years, you know, there's not many mistakes left that I can really make, hopefully, you know, and not you know? But, you know, the guidelines are always changing, you know, guidelines are constantly changing, you know. I mean, you know, with the agencies are always tweaking things here and there. And if you're really, you know, not paying attention, you know, a guideline that you thought was, you know, okay, just a few months ago may have changed, and that could blow a deal, you know, so you really got to stay on top of things.
Yeah. And then, you know, so going back to what you said, as far as like what's important in your business, and you're always talking about your relationships with the realtors, right? So, and that's something that I've always appreciated about you, is like, if I give you a referral, if I put you into a deal, I trust that you're going to take care of them the same way that I would take care of them. And that's something that is not so common. Right. I don't want to say it's very rare, but it's not so common. And that, coupled with the fact that you can get the deal closed, is truly helpful. So, you know, I truly thank you for being as honest and as hardworking as you are, you know?
Thank you. No, that's, I mean, you know, again, our businesses depend on each other. You know, so unless you're at all cash buyers, you need a reliable lender to work with that's going to have your back, that's going to get back to you. You're going to know exactly what's going on with your deal before the client even knows necessarily what's going on with the deal. You know, so you can move on with, you know, building more clients. You know, I mean, if you're constantly having to, you know, make phone calls to attorneys and lenders and everything else to try to find out what's going on, you're wasting time that you can be using with new clients. You know, so that's really where we come in. Like we send constant updates without being, you know, you asking, you know, the updates just go out, you know, when the appraisal's being ordered, you know, when appraisal comes in, you know, when the commitment letter goes out, you know, and the conditions are, you know, like you don't even have to ask, you know, so.
Yeah, that system of just getting updated automatically is super helpful. And it reminds me a lot of KW and how we do things, where it's like you have the stages of the transaction, and like all you got to do is click a button, boom, all right, this is done, and then the client gets an update. And they feel so much more comfortable knowing that like it's literally like paper pushing at times, but the comfort that it brings to them to just see like every other day something is happening in your deal. It's super helpful to them. And that's a feedback that I get. And one of the things that, you know, buyers and sellers tell me all the time is, you know, I asked them, I say, what's important in a realtor? What is important in a realtor to you? And they always say communication.
Absolutely. Yeah, it's funny. The very first mortgage that I got, which was actually, you know, a good friend of mine, did it before I was in the business. You know, he's a great loan officer. He's still in the business. He did my loan, but, you know, this is going back to like 2000, my first co-op that I bought. But I always felt like I never knew what was really going on. Like, you know, I would just get an email saying I need an updated pay stub. I needed, you know, and I was like, I just sent him a pay stub. I just sent him like a, you know, a bank statement. Like, why do they keep it? And I just felt like it was going on, you know, really. And I learned from even my own experience before I even did mortgages, that when I started doing mortgages, how I wanted to communicate, you know.
Yeah. So today is December 15th, right? Yeah, today's the 15th. So we've got another episode next Friday. You around next Friday, the 22nd?
Yes, sir.
All right, we're gonna come with a holiday special, and then we're gonna go into a New Year's special. All right.
Nice. All right. Make sure I have my Santa Claus hat on. All right.
Yeah. Dude, I have one in my drawer.
I got one too.
All right, man. Listen, thank you for your time, and I'll be in touch. Okay.
All right, Steve. Thanks so much.
All right. Take care.
All right. Bye-bye.